Welcome back to the channel, the investing channel that focuses on income-oriented investing on the Canadian and the US stock markets, designed to provide you with passive income every single month. So welcome to episode 16 in my monthly series where I review my high-yield dividend stock picks of the month designed for passive income from a year ago. So on my YouTube channel, as most of you already know, I have a monthly series called Top 3 Dividend Stock Picks of the Month designed for high income, which I've been doing for over 2 years now. So in that video series, I give you my opinion on which 3 funds I feel are undervalued at that time and a great buy for that particular month, right? So in this video series, however, I will go back and review those stock picks 1 year later to see how they're doing right now. So doing this holds me accountable for my stock picks, of course, and further proves that I am completely always an open book to all of you, which I know you all appreciate. And honestly, it's also to satisfy my own curiosity. I know some of you disagree with some of my stock picks. So this is a way to actually see what happened 1 year later. So I can make mistakes also, of course, but I continue to learn and gain experience with investing just like you. We're all in it together, right? So it's time to review my stock picks for the month of July 2021. I will not only check the share price, of course, but also the status of the dividend or distribution, which is much more important for us income investors. So was I right? Was I wrong? Let's find out together. All right, everyone, so let's go through my July 2021 stock picks. The US stock pick was OPP. This is a US listed closed-end fund managed by both River North and Double Line. So Double Line is a fixed income expert. River North is a tactical, opportunistic closed-end fund expert. So let's check out what the fund has here. So the fund, as you can see, here's the split, right? So most of it is actually fixed income managed by Double Line, 65 to 90% at any one time. And then the rest is managed by River North, which is the tactical CEF, this tactical closed-end fund income here. So at the time of the pick, it was about 80-20. Now I think it's a little bit more bigger on the closed-end fund side currently right now. So my key points in reasoning, so this was during the time when I was discovering closed-end funds. So this is why it was a pick. I found this was a really good closed-end fund because of the dual manager, and it's a bit of mostly fixed income, but also that closed-end fund tactical. So key points in reasoning, of course, this is the passive income channel, right? We're looking for high yield. So the distributions, kind of like CLM, it's reset annually, and just like Riv, it's at 12.5%. So both Riv and OPP get reset annually every single year at 12.5%, whatever the NAV is. Obviously, this is a unique fund that's managed by 2 advisors, which I really like. The fund was trading very close to the NAV, so it was less than a 2% premium. Right now, it's actually at a 2% discount with the overall market sell-off. And this has primarily fixed income. So this fund has primarily fixed income, more specifically mortgages, right? That's what that MBS, you see that here, non-MBS, agency MBS, 33%, 11%. So a big chunk in mortgage-backed securities. Great for RSPs, of course, for us Canadians, because there's no 15% withholding taxes. Second pick, so the Canadian pick, was the CI Gold Plus Giants Cover Call ETF. So CGXF, so this holds 15 of the biggest global precious metal or gold producers, and of course it's a covered call ETF. No leverage on this one, it's just a regular vanilla covered call ETF. And as we know, CI's covered call strategy, they do covered calls, aggressive covered calls at the money, but only on a quarter of the portfolio. So 75% captures that upside. So what were my points and reasoning? I find these were really spot on. It was a great entry point for investors because during July 2021, we were in a full-blown bull market. Everything was going up, but of course, the gold producers or gold lags in a bull market, right? So that was the primary reason for the pick. Only the big miners in here, only the big producers. You actually have the list here, so you could see Newmont and Barrick and Goldfields, Franco-Nevada, Wheaton, of course. So only the big guys. And since the fund does have big losses since inception, so when it was created in 2011, it was about $40 a share. That was really at the height of the gold producers. And why I'm mentioning is this, and why it's in the key points and reasoning, is because a lot of the income is not taxed. It's all rock income. So yes, it will lower your adjusted cost base when it basically, think of it like delayed capital gains. But if you have this in a cash account, there is no we're going to expect a lot of continued rock or tax-free income. So there's good rock and there's bad rock. Don't forget. So I have videos on those. Make sure to check it out as well. And gold producers is a hedge against inflation, which is happening right now. Future stock market crashes, which we've had a recent sell-off. Now it's a bit stable, but some people predict that there's the worst is yet to come. I don't listen to predictions, but this is anything gold, precious metals, materials is good for inflation. And of course, cover call strategies, right? It greatly increases the yield. So you're looking at about 12% yield here. And just a small note, GGN, that is a similar fund on the US stock market that also does cover calls on a lot of gold producers, but it also has a bit of energy as well. Last pick is EIT, my favorite closed-end fund on the TSX. This is the Canoe EIT Income Fund, of course, very, very popular, one of the biggest closed-end fund, over $2 billion. The dividend has not changed for over a decade at 10 cents a month or $1.20 a share. So this, these guys are active stock pickers. So that's why the management fee is a bit higher, because it's really an actively managed fund, not a passively managed fund like a covered call ETF, for example. And it really invests in quality value dividend companies in North America. It's about 55% Canada, the rest in the US. So here is the breakdown. It's very similar breakdown right now, actually, with a lot of the same companies. So these guys tend to, once in a while they'll have new companies in there, but the core stays pretty much the same. So very high on the financials, energy, and healthcare. That are the three main sectors. Not pretty much no technology whatsoever, which is why this fund has done really, really well. We'll take a look at that in a second. So this is my key points and reasoning. This is my favorite Canadian closed-end fund of all time. It's one of the OGs of my income portfolio. It's one of the first closed-end funds I invested in. So obviously it has a special place in my heart. And during that time, they had a recent share offering which lowered the stock price and was trading at a small discount. We all know when closed-end funds do share offerings, rights offerings, overnight offerings, they have to do it to issue more shares because it's a closed-end fund. So usually when that happens, the stock price goes down the next day or the following days because the market is flooded with new shares, simply supply and demand. And keep in mind, it's not diluting the stock price. They're issuing new shares, usually always at a premium to the NAV. So it's always accretive, not dilutive. So very good stock collection, a quality blue chip here, guys. Usually it's they focus on dividend growth stocks. So these are mostly dividend growth stocks. Great diversification as well, like we saw. So 10% yield basically means 10% interest rate. Now it's a bit lower because it's about 9.5 or something like that, because the price is a bit higher. So very reputable, very well-known mutual fund manager, Canoe Financial. They're very pro oil and energy because those guys are from Alberta. So very, very trustworthy, very tax efficient distributions as well. So mostly capital gains, and ROC is delayed capital gains basically. So mostly capital gains, so very tax efficient in a cash account. And always, I do have a specific video where I review EIT, so you could always check it out. So those were my picks. Now let's see how they're doing now. All right, everyone, let's check out the monthly report card, which is available for download, of course, on my website, passiveincomeinvesting.ca. Just go to free tools and resources at the top, and it will be the second download. So I apologize if it's a bit small. You could always download it there, and you will see the report card for all my prior picks as well. So let's start with OPP. This is probably the worst one out of the three, right? So right now the price is about $11.30. So you would be down 27.5%. Not really a surprise because of the heavy focus on the MBS, on the mortgages. And keep in mind, this fund does use leverage up to 30. It's about 30% leverage. So it went down even harder. So in terms of dividend status, it's reset every year at 12.5%. So it did reset a bit lower for 2022, and it's actually scheduled to reset even lower for 2023. So not really a great stock pick. I mean, this was when I was really starting to learn the US funds, and considering it has a lot of MBS, that's really why. But it's slowly recovering. OPP is starting to pick up now. The reason why I think is because when you invest in mortgages, they're really long-term investments. So when rates start going higher, the mortgages are going to be higher rate, but you're stuck with the old mortgages at the lower rate. So it takes I'm assuming, I'm just speculating here, don't take this with a grain of salt. I think that once these guys cycle into the newer mortgages, the NAV is going to recover, the stock price is going to recover. But luckily, it's not just fixed income. They have that little percentage. This is why I like that dual manager structure a little bit in the tactical closed-end fund as well. So yes, the dividend was reset lower this year. Will be reset lower next year if the NAV doesn't recover. But hey, it's still paying monthly. It's still designed to pay monthly, and it's been doing that. So I've added a little bit to it. I think now's actually a good time to pick some up. Although it is recovering, so the discount is pretty much gone now, or almost going away, but it's pretty much in par with the NAV price to the market price here. So a good pickup if you want to add some fixed income. The only time I would get fixed income is if it's in the US and if it's leveraged. So yeah, pretty good pickup right now, but I wouldn't make this too big because it still is very heavy on the mortgages. But hey, if you're opportunistic, you could get a really, really, really nice yield right now. I think it's like at 15 or 16% or something like that. Second pick, CGXF. This, although it's down 15% right now, it's 985. I have to say, yes, it was a good stock pick, right? Inflation is upon us now. So my reasoning is spot on. You buy gold, you buy materials, you buy gold producers when the stock market is during a bull run, because that's when gold and gold producers go down. So I was spot on for this one. The price is minus 15%, but if I would have done this report card between March and May, I kind of looked at it where the price was between $12 and $13, it would have been a much you would have been in the green, significantly in the green. So right now we're going through what I like to call an overall sell-off, where there's not much logic. Everything is just selling off, even though it shouldn't, like financials and energy and gold. Everything is just going down now because that's just what happens when there's fear. Everyone panics and sells, and the opposite happens during a bull market. There's greed. Everyone's just buying everything. That's what was happening in 2021. Third pick, EIT. This was a really, really great pick, probably the best pick, because it's very heavy on the energy, on the financials, on the healthcare. It has zero technology, which has suffered. So very, very good stock pick. You're looking at an unchanged dividend, a small increase of 5%, even though that's not really the main purpose, but really, really got a good stock pick, considering that this is 1 year later from a really high bull market, and now we're starting or on the cusp of a recession, or I'm not predicting, I'm not saying anything, but the market is a bit lower. So overall, I would say, considering that the market is really down now, considering that this time last year we were in a bull market, pretty good score. I will give myself maybe a B+. Just the OPP one, not that great, but hey, hold on to it, don't sell it. Let's keep getting our income every single month, and eventually it will recover, because usually everything does. This is a fund that holds a lot of stuff. It's not a single company, don't forget that. So there you go, everyone. Hope you enjoyed the stock picks 1 year later. Same thing next month. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys, where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors, so it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1 hour Zoom call with yours truly, a one-on-one with me, where you could ask me anything you want. We'll go through your situation, and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other, and it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right? In order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So as usual, I continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.